Wow, what a big attendance today. Thank you all very much for attending MBMG's event, the Outlook for the Thai Economy. I think the record at the FCCT is about 120, so I think we're pushing pretty close to that today. And of course a big thank you for the guys at FCCT for having us back and for the excellent food and drinks today. I'll keep things as brief as possible because we've got a lot to get through, but as one of the consultants at MBMG, just about every client that I speak to lately asks me what is happening with the Thai baht, what is happening with Thai property, should I be investing in Thai stocks, which is the reason why we put this event together. We, as much research as possible we can do, we really want some speakers with some real knowledge and some real inside info, so we're quite lucky today to have some very good speakers. First of all, we've got Paul Gambles, who many of you already know. He's the managing partner at the MBMG Group. He'll be first up. Second of all, we've got Dr. Kirida Bhaopichitr, who's the senior economist at World Bank. Thank you for coming today. Third up is Mr. Chanitr, who's the Exec VP at the Stock Exchange of Thailand. So each presenter will be giving their views on the Thai economy and what they see going forwards. I think after which we'll do a question and answer session because we're a little bit limited on the time for our speakers. So we'll do a question and answer session after that. After which we thought it'd be quite fun. We've got a team called Xera who are finalists in a competition which is conducted at Chula University every year, and it's called the Bangkok Business Challenge, and it's kind of a dragon-style den 99-second presentation on a venture capital idea. So we thought it would be fun to invite these finalists up to come and have a look at how they presented this year. Lastly, and I said we've got a lot to get through, we've got Ian Black from Friends Provident International, who are one of our business partners, and he's just going to be doing a very quick overview on what he perceives to come out of the UK budget today. So Ian Black will come up at the end and look at the UK budget today. And after which time again we'll do another question and answer session. So enough from me. Without further ado, I'll hand over to Paul Gambles. Thank you.
Thanks everybody. I don't know why everybody keeps saying to me don't talk too long, but for me it's a big privilege today that I'm sharing this podium with what I think are two of Thailand's smartest people. That's something I can say, but then when they look at me, they can't actually make the same claim back, unfortunately. What I'll quickly do is, for anybody who doesn't know MBMG Group, MBMG have been around in Thailand since 1996. We have a range of services in, I suppose, all aspects of finance, legal planning. We have an accounting practice, audit practice. We're part of a network called PKF International, which is the world's 10th largest professional services network with 400 offices in 125 countries. But you can actually read all about that in the MBMG brochures that I think are part of the welcome pack that you've been given. And down the bottom there, that's myself. We've been very lucky to have been inundated with a whole bunch of awards over the last few years for various different businesses, and that's just a summary of some of them. We're starting to run out of office space or cupboard space, I think shelf space, to display all those. What I want to talk about today is, as I mentioned, I think we've got two of the smartest commentators on Thailand on the stage here with me. But actually there's maybe a third person as well that I think maybe we ought to have a think about, whose views are important. That's actually a physicist. That's a man called Werner Heisenberg, and he's famous for the principle in physics that if you know where you are, you don't know where you're going, and if you know where you're going, you don't actually know where you are. Now that's unfortunately not a reciprocal relationship, i.e. the fact that you don't know where you're going doesn't necessarily mean that you know where you are, or the fact that you don't know where you are doesn't necessarily mean you know where you're going. And I thought that was maybe a good starting point. What I want to very quickly cover in a few minutes is basically how Thailand got to be where it's at today. And one of the things that I always do, partly because I think it's a great insight and partly because it saves me having to do the job, is I recommend that people read a book called Asian Godfathers by an author called Joe Studwell. It's basically a history of the development of commerce, of trade, of capital markets in Southeast Asia. And I think for for any of us who are trying to catch up and understand what really goes on here, and I've only been here 19 years myself, so I'm still very much at the early learning stage, but I think for any of us who don't really understand how things work here, it's a good shortcut. One of the premises of the book, it really starts from the fact that in Southeast Asia we had a lot of agrarian economies. We had very self-sufficient economies. We didn't really have a lot of the problems that they had in Europe back then, and which some people would say they still have in Europe today, of having maybe far too many people in far too small an area. In Thailand, in Southeast Asia, there wasn't really any need to go and to create the kind of communication technology of shipping that allowed people to go and import scarce raw materials from places where there were plenty, because in Southeast Asia raw materials were plentiful. It's partly a reflection of the climate, the topography of the region, but you know, raw materials, commodities were always plentiful here, and that had a slightly negative impact on development, in that it means you don't need to have shipping fleets, you don't need to have weapons, you don't need to have a lot of the technology that developed particularly in Europe in the Middle Ages. And when that was forcibly exported into this region, we ended up getting Southeast Asia quite significantly colonized. Now I know I think just about every Thai person I've ever met would be quick to point out that Thailand has never been colonized, but all the surrounding area was. And I think to that extent maybe there was a kind of an economic colonization of all of Southeast Asia that went on. And the various different phases of that, I suppose, are that we saw raw materials, we saw the precious raw materials being extracted from this region, they were taken away. All the added value processes were done in these developed economies. And that was really the story of the 19th century. As the world started to open, Thailand became an open economy. That had many benefits, but it also meant that we were facing a situation post-World War II when capital flows primarily out of the United States at that stage were the dominant determining factor in global development. And sorry, I'll get the hang of this thing in a minute. So we went from the era where modernization was actually imported into Thailand to a situation where we had import substitution as a way of development. So the kind of manufactured goods that Thailand was developing, or that Thailand was importing, with a first logical area to go and mechanize, to go and modernize. And we then went to what was called export-oriented manufacturing. So the fact that we had huge resources of cheap labor here meant that we could go and export to the world. And that's really the history of Thailand since World War II, that we've changed from this import substitution to export-oriented. And we're now at a phase, I think, where we're actually starting to see Thailand move on to the next phase, which is probably essential for escaping from the middle income trap and to move up the value chain. But luckily we have Dr. Kirida, who knows 1,000 times more about those kind of aspects than I do. One of the problems of the kind of compressed development that we've seen in Thailand, that's happened, you know, things have happened here over 100 years that maybe in the West happened over a few hundred years, are that we've gone from this feudal agrarian type of economy into an industrial economy that still retains some of the features of a feudal economy. We still see a very small number of people controlling a very large amount of wealth. I think, you know, the same 11 families control the majority of the market share of listed companies in Thailand from 1980s, 1990s. That only started to change when we had the Tom Yum Goong crisis. So a lot of the socio-economic and political developments that took place in the space of a few hundred years in Europe have really been compressed into a fairly short period of time in Thailand, and that's created its own challenges. So this thing is far more sensitive than I am, clearly. So we're at the situation now where I think one of the socio-economic driving factors is about wealth distribution. Thailand clearly needs to move on to a much more equitable form of wealth distribution. We can't just have 11 families owning everything, although the 11 families might like that, but ultimately history has shown that model doesn't really work. And we have a number of, I think, policies that are in place at the moment that claim they're trying to address that issue of wealth distribution. We've got some concerns about those, because it seems to us that a lot of them aren't necessarily redistributing some of the existing wealth. They're just trying to create additional wealth through the form of debt, money printing and stimulus, and to try to trickle that down into Thailand's emerging wealthier classes, and that in itself is a worry. We've put up there a picture of the Governor of the Bank of Thailand, because I think he's a fairly central figure in a lot of what's happening in Thailand right now. One of the things that has come to our attention recently, and I haven't seen a great deal of coverage of this in the press, in fact I haven't seen any coverage of this in the press, everybody knows there's a turf war going on between the Bank of Thailand and the Ministry of Finance. That's obvious. People have commented on how monetary policy has been the battleground for that turf war. Bank of Thailand seem to have resisted any calls for easing interest rates, which I personally agree with the BOT's policy. I think there's a situation in Thailand right now where we're seeing a healthy recovery from not only the global financial crisis, but also obviously the problems that were associated with the flooding here. We're seeing a healthy recovery from that. We're seeing very low unemployment rates. We're seeing stock prices, property prices start to get into the kind of territory where people are asking if we are in a bubble, if we are going back to the mid-90s. And that's usually the time when classic economic policy tells you that you ought to be perhaps more defensive, you ought to be conservative. You need to be saving up the bullets that you've got for when you might actually need them. Firing them right now is merely fueling growth that's already happening. And I think one of the ways of measuring that is if we looked at the global stock markets last year, they increased by around about 10%, 10 or 11%. If we look at the Thai stock market, it increased by over 30%. I think there's a couple of factors for that. One is the excellent work of Chanitr, maybe over the last few years, but the other factor is that we've seen massive amounts of stimulus pour into the Thai economy. That's not entirely down to the Thai government. I think we also need to look at what Western governments are doing, the amount of liquidity that's being produced. People can't control liquidity. It flows into Thailand. You may have read in the press or seen on the TV a huge amount of fuss and furore over something called the sequester in the States last month, where automatic spending cuts came in place, and it's been estimated that they're going to reduce the amount of expenditure in the States by $85 billion this year, which sounds like quite a lot of money. Again, I don't understand why it's not being pointed out that $85 billion is also exactly the same amount of money that every single month the Fed are creating to go and buy mortgage-backed securities in the States. So it's basically 1 month's stimulus. We had all that fuss, furore, noise about the fact that they were going to have 1 month's stimulus taken off them, and I'm sure they've got other ways of increasing that. So I think the sequester was probably a bit of a false event. I think in Thailand, as I say, Thailand's been the beneficiary of that. There's been a lot of talk about capital flows. One of the things that we think is really interesting, and this is the final point I'll leave you with, one of the things that we think is really interesting is that since about August last year, and this is the point that, as I say, we haven't seen coverage in the press, but since August last year, the Bank of Thailand completely reversed its long-standing policy. It stopped sterilizing incoming capital flows. It basically stopped buying dollars. The Bank of Thailand, whenever there have been inflows, has historically always bought dollars, sold baht to try to depress the value of the baht. It not only stopped that, it actually went into reverse. For the last 6 months, the Bank of Thailand has been, as far as we can see, quite deliberately undermining the government's stimulatory policy and trying to keep a lid on the speculation that's going on. We estimate the Bank of Thailand actions have probably prevented something like about 100 points of extra appreciation taking place in the set. We think they're largely responsible for the baht being at the record levels, or I think 16-year highs, 15-year highs that it's at today. A lot of this is down to the fact that we've not only seen an end to sterilisation, we've seen reverse sterilisation. The Bank of Thailand is currently supporting and strengthening the baht. I think there's a lot of interesting questions around that, but I think clearly what they're trying to do is use fiscal policy measures as a way of trying to keep a lid on what's going on. And therefore, if you want to know what's going to happen with the baht over the next few weeks, months and years, the best way is probably to try and be a ringside observer in this boxing match that we have, this turf war that we have between the bank and the ministry. So with that, hopefully, for once I did actually talk fairly quickly and not go on too long. I'd like to pass you over to somebody who knows an awful lot about all of those issues, an awful lot more than I do, Dr. Kirida.